morning, everybody. It's Thursday, March 14th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments or would like to chime in on anything we're talking about, please drop us a line in the chat area. We'll be sure to get to it during the show. Overnight markets here had May corn down 3 cents at 438 1/4. May soybeans were up a penny and a half at 11.98 1/4, and May Chicago wheat was down 9 1/2 at 534 3/4. This morning's export sales report was solid again for corn, almost 1.3 million, 1.283 on the corn side. Upper end of the estimates, we're looking for 1.4. So another solid week in the corn complex. Soybeans sort of mid-range, 376,000 for 23, another 94,300 for 24. The wheat complex was pretty poor, 83,800 for 23. And another 81,300 for 24. The lower end of the range was looking for about 200. So pretty poor on the wheat side. And meal sales were solid, 209,500 for 23 and another 96,300 for 24. We did have an export sales announcement in addition to the weekly sales here this morning. Mexico purchased 100,000 corn for 23. Wholesale inflation data was also out this morning. Continue to see an uptick in inflation, 0.6% rise in February. They were looking for 0.3%. And when you exclude food and energy, core PPI was up another 0.3%. So as we mentioned yesterday on the show, we're not seeing an easing in inflation at all. The metrics that they're using in terms of deciding whether to cut rates are just not going the right way for them at the current moment there. So, guys, a lot of data here to get through this morning. I know we had one analyst's private estimates out yesterday. Looks like quite a bit higher on the corn number than I think we've certainly been discussing. Looking at like 93.4 million corn acres, that'd be about 1.2% lower than previous year. And beans there at 85.8, which would be up about 2.7. So I know we're going to chew on these numbers quite a bit. We're going to see a lot of private estimates out. I'll throw it over to Dustin there, get a few initial comments just on all the data that was out this morning, and then we'll kick it around the room.
Yeah, thanks, Dan. Yeah, we're in that time of year. It's a bit of a transition time where we're still figuring out those acres, and we're coming off of very low prices. So there's been a thought on our side, especially that due to the metrics for lending and the extremely high corn acreage number last year, that there could be a pretty big switch over toward bean acres this year. As we're getting, some of these average estimates in, I think there's still a pretty high corn number from a lot of participants, what they're thinking going into this March 28th timeframe. But I've also heard, different seed company comments that we're still selling a lot of corn here. So it will be interesting to see what the intentions are. Whenever you get production below cost production, or prices below cost production going into a season, and you have a high ratio beans to corn, we naturally think that switch toward beans should happen anyway, and that we're not going to see this probably in the March numbers. Obviously, prevent plant is also a big thing when profitability is low in the northern plains. If weather is at all adverse, we can see those acres go up. We saw pretty large prevent plant acres in 2020, for example. So if your average cost production is somewhere north of $5 corn, which is what university data suggests still, I find it hard to believe that once we finally get all the planting data and June 30th report comes out, that we're not going to see something closer to even between corn and beans on acreage, which would be more like 89 million of both. I don't think really many people are projecting that at all right now. But it might be something, either if it does happen, it might be something we don't even know about until June. So that's another thing to consider too. This March intentions report is all pre-loan renewal, and it could be that there are still a number of growers intending to plant corn, and that changes by the time we get through it all.
It's absolutely impossible to predict pricing environments, and I realize that. But you do reference if you're pretty close to, let's say it's an 89 type of split when you get to the finish line. What's that pricing environment in your mind? What could it potentially look like?
Yeah, I think, well, it would definitely be at least not necessarily extremely bearish corn. I think the onus on having a, near trend line yield to keep carry out growing would still be there at current prices.
Okay.
Demand is still kicking. I think we're like export numbers today. We had China in there a little bit as well. We've done really good sales and shipments to Mexico this year, and we have energy prices still very high. As part of the numbers this morning, inflation numbers were high in part because energy prices are still not coming down. So I don't think that demand is necessarily going to be a big question. If prices can rise and demand can support that. So if yield is at all in question this summer, and we have an 89 million corn acres number, then yeah, there might be some pretty good pricing opportunities in that June timeframe if we're still dry. Like if we're looking at the drought monitor today, for example, if we still are this dry going into that, I think that will definitely be a factor on the market's mind. But when you're thinking about hedging and thinking about downside risks, it doesn't help to if for some reason it starts raining. We have 89 million corn acres and 89 million bean acres. We still probably have plenty of total production in the end at trendline yields, and so it could actually be more of a bearish bean story than it would be a bullish corn story in the end. So this ratio 2.5 to 1, we've been near that for a while now. If we're 89 million of both and we have normal yields, I think going back to 2.2 by year's end, 2.1 wouldn't be out of line. And that could be a problem for the fact that beans have, a safety net through Farm Bill is much lower than it is for corn in proximity to where we are today. And a lot of times, some of these areas have been corn and corn for years. They have an APH lag for beans. So they're not necessarily able to insure that to the higher amount. I'd actually be a little bit more worried about bean pricing by year end than corn pricing, I guess, if I had to put a knee-jerk reaction to that idea of equal acres.
That's good stuff. One last thing, Dustin, this morning too. We were talking, the last couple of days, and you referenced something that I thought was pretty interesting for some folks that have purchased these MP crop insurance policies. In some instances, I think they're getting into payment scenarios and stuff like that. But there is also a buffer there where they can switch certain amount of acres within different counties between the two crops. And I thought you referenced a pretty neat point as the pricing starts making its way here through March. The relationship between corn and beans, and if you're looking to adjust some of that with your MP policy. I thought that was pretty interesting.
Yeah, so MP is such a small portion of the insurance policies that are written for corn and soybean row crops. But basically, you would have had to purchase this back in September, and whether it was corn or beans, they're both extremely good policies to hold right now because prices have dropped since then. So we were at 509 average for corn, 1295 for beans. But in some cases, growers might have chosen an MP policy on one crop but not the other. That would probably impact in those few cases. I don't think this would be anything that we would see in the national numbers because so few people have MP anyway. But if you had, for example, MP on beans but not corn, you certainly are more apt to consider that in your rotation if you haven't put those inputs down yet for corn. So yeah, and also if you're picking up ground, if you have MP and you're picking up ground, you can add up to 2,000 acres per county.
It's pretty significant.
Yeah, it's an asset to have right now because you're basically able to claw back additional coverage on that new ground. So yeah, it's just something interesting about MP. If you have MP, it's a really weird policy. I think we've had mixed emotions about it over the last couple of years. I mean, I like that you can buy RP on top of it, right, and still make it individual coverage and still have a county connection. It's rather expensive, and there's a degree of uncertainty about it because you've got changing input costs that affect that margin, and we don't know those all the way until April. So in our software, we have different tools and stuff to kind of slide, what you think costs are doing, if they're going down or up through that time frame. And then you can also slide how the county's doing versus your own yield on our matrix. So you kind of have to make some assumptions with that policy. And, that's always a dangerous thing if you're wrong on the assumptions.
Sure.
Right? So you got to be careful how much you lean on those types of policies. But they are, I would definitely want one if I could go back in time and buy one instead of not having one. It's a good asset to have right now.
Yeah, definitely. That's good stuff. Ben, we've noticed this morning, just was in digging through some stuff, and we've seen a massive amount of Chinese cancellations with our SRW over here, couple this week. Also noted that they're canceling French soft wheat as well as their Australian purchases as well. So by all estimations, I mean, wheat's got some headwinds and some troubles here. What's your opinion?
Yeah, I think there was a lot of excitement when we saw China come in and aggressively purchase wheat. We saw a really solid attempt in February to take that market inverted and maybe really run in the last remaining shorts, and it failed miserably. That the end of February has historically been a time where the wheat market can be very vulnerable to things like that. Whether you look at when we had the 2022 with Russia, Ukraine, the market was ripe to be exploited at that point as we went into delivery. You go back to 2008, the high of that year was made in that time frame. So it gets to be a little bit tricky as we get into the new crop growing season, and I think people get a little bit more nervous. But the cancellations have a tremendous impact. We were probably another purchase away from materially affecting the balance sheet, and I think that's what people had their eyes on. There was a lot of enthusiasm. That being said, we've taken that out. We did make new lows in the March contract off the cancellations, and wheat just can be a very fragile crop at times between here and into June. So I think it's worth keeping an eye on both on U.S. production weather and on geopolitically what happens there. So it's probably a tough short from here on out, but that's not to say that they don't get paid and continue to sell into it. So very disappointing, I think, from people who are kind of purists in the market environment. It's very frustrating to see these things happen. It kind of, it is emblematic of a cat hitting around a ball, and that's kind of what China does with these markets at times, and they do it to their advantage because of their strong presence and purchasing power. So frustrating for sure. Talking with customers, wheat looks really good right now. I've driven over towards Northwest Indiana and down to Southwest Ohio over the last 7-8 days, and it's greening up. It looks really good. And we'll see, how things play out here between now and late May. So,
very good. Appreciate the insight.
Hey, Dan, I'm gonna jump in real quick. I just want to
Sure.
make a comment on corn acres. Just a little bit of history lesson, kind of looking back at the last bull market we went through, right? At 2011, 2012. Right. So we got up to in 2012 planting 97 million corn acres. 2013 we dropped it a couple to 95 million, but you got to remember, like 2014, at this point in time that year, we were still at 560, 570 corn. The following year in 2014, we lost close to 5 million corn acres that year, and this time frame, right, February, March, we were down to like 460 corn. So just a little history lesson of how big corn acres can flop in bear market years. So, right. So we planted 94.6 million corn acres last year, a lot less bean acres. I know we've been kind of tooting this horn a little bit, but so I don't think it would, and I think Dustin was making this point, wouldn't surprise us to lose 4 or 5 million corn acres and move and switch that to beans.
This corn market needs it. That would be, I would say that would make that March report, exciting for folks that are looking for better margins. When you agree, I mean, that's what it's like. We need something like that.
Yeah. Well, the problem is we'd probably end up planting more corn acres because we'd have a we'd have a rally, right? Get everybody excited. And then,
yeah. It'd be fun for a couple of weeks, I suppose.
Yeah. So on that front, just like, would it be a real bullish thing? I think a lot of people will point to the balance sheet and say, well, we can still probably get by with plenty of excess supply, even at 89 million acres at trendline yield. And to that point, 14 the acres were down, right? It was a pretty bearish year at the end of that year. We were down at we started above 5 in March, April, May, still lost those acres. I remember that year as being a massive equity loss for the average grower in general. We ended up at 320 corn in October.
Yeah.
So it was the big bear market year because we also came out and had tremendous yields, good weather. So
sure. Yeah. That's a great point.
Oh, very good. Coming into the open here, Rylan, really quick. Do you got anything shaking out in cattle? It's been pretty quiet.
It's been quiet. Futures actually are trading pretty well here. Nice little technical move yesterday, and just some rumblings of some higher cash, but nothing confirmed yet in the north. But yeah, we're in that gap from October 20th. We're kind of nearing that 78.6% retracement off that September high to the December low. So we made a lot of progress on this rally. Let's not squander it. And it looks like the lighter kills aren't really having any impact on market direction right now. So we're just going to stay the course. April got up to 190. I think it's a good level to, with the premium in the market starting to look to maybe get some extra coverage here. But aside from that, still waiting for cash to show up here. And nothing on the reports yet.
Oh, very good. Appreciate that, Rye. As we open here, May corn down 2 3/4 this morning, 438.5. Got May soybeans up 5 at 1201.5, and May Chicago wheat is down 8.5 at 535 3/4. We'll have NOPA out tomorrow at 11 o'clock. We'll have some estimates. We'll talk about that in the war room tomorrow morning. It will be Friday, so Brian will be prepared. We'll have a little fun fact Friday for you tomorrow.
I can't wait.
It gets everybody riled up for the weekend. So as always, we're streaming live every day. The markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Good conversation this morning, guys. Appreciate the feedback, and we look forward to talking to everybody tomorrow. Have a great day.
Thanks,
Yeah,
Dan.
thanks, Dan.